Okay, so I'm Peter Switzer and you're Brian Sheahan.
Brian Sheahan. Nice.
And this is the Noosa Conference, Mining Conference 2015. Mate, a lot of the speakers have been talking about the investment clock, saying it's at 4 o'clock. What's your view on that?
Yeah, well, the investment clock, Peter, it's a good question. The investment clock's been around for a long time. 1937, I think it was first invented or spoke about. It was adopted for the resources sector by Lion Selection, an investment company, probably 10 or 15 years ago. And what it tries to do is obviously put in perspective the cycle. What it does show that in certain parts of the cycle you get the boom and the bust. What are the preludes to the boom? The preludes to the boom is when the sentiment gets negative, exploration stops, the big companies start taking over smaller companies, and we start to get the recipe for the boom. We're getting close to that point now, and certainly we don't know how long it'll last, but we're getting very close to it now.
Do you think we need the global economy to really get into the next stage, to push commodity prices up, to really make people believe that we're at 4 o'clock and going higher?
Yeah. Well, also the global economy is a number of economies. So what we're seeing at the moment, a lot of stimulus has been going on in the US, which is starting to kick in. Yeah. You're a bit behind that. Europe's obviously got some issues, well publicised. Japan's being stimulated as well. So of all these different economies, we're starting to see signs of life. Asia itself, while we've had the ups and downs in China and a bit of manipulation there by the government and the economy, we're starting to see those lights. And there's a few sort of sideliners like India starting to look really interesting what happens, and a huge population. So we are seeing the results of some of that stimulus coming through.
Are you going to use the Morgan mining indicator that this is a record turnout for your conference?
Well, look, it's the 5th year it's been going, and what we've seen is, obviously when we started 5 years ago, there was a lot more interest in the mining sector than now. But you're right, this is a record number of people, and I think what's really interesting is there are a lot of people who are asking really good questions and spending a lot of time analysing and talking to the presenters. So there's a good groundswell of interest coming in, which is always, as I said, part of the investment clock. The smart people are starting to have a look.
Yeah, and I know you're not the sort of person who leads the investor, but are you thinking maybe the contrarian who's prepared to have a go now may well be smiling in 2 or 3 years' time?
Yeah, as I said, you don't know how long it takes to get these things to rise. What you have seen in Australia with the currency falling, you've had costs falling, you've got oil price falling, you're starting to see the recipes that companies will start to make money. And the companies that start to make money, will they be those ones that say, well, I might pick off and buy some of the guys who are less fortunate. So that is that part of that clock. So how long it takes for the market to wake up. If we go back to the last cycle, there were some big acquisitions. MIM, WMC, Queensland Nickel, Comalco, all disappeared in a period of time, and just before the boom took off. So that's what you look for.
I feel as though I'm getting a fantastic leg up to go long on stocks, particularly in the mining area, mate. Thanks for joining us.
All right, thanks very much, Peter. Good to see you again.